Should you buy into Robinhood after its initial IPO? What's going on, guys? It's Justin from Push and Profit. Hope you're having a beautiful day today. Now, in this video, we're going to go ahead and break down whether or not you should buy into Robinhood after its initial IPO. Now, recently, fund manager Kathy Wood of ARK Invest thought it was a good idea to buy into Robinhood after its IPO. However, on this channel, I constantly preach that you should never ever purchase any stocks or securities based off someone else's opinion. So with that being said, make sure to hit that like button because we're going to break down a few factors to help you decide whether or not you should buy into Robinhood stock. Alrighty, so we're at sec.gov looking at the S1 filing for Robinhood. Now basically this document just explains what the company plans to do with its capital. Now this is a 300 and plus page document. I don't expect a lot of people to read it front and back thoroughly, as I didn't read the whole entire thing thoroughly, but I do know how to skim through these. And something that I found very noticeable is that Robinhood in their S1 filing mentions this acronym PFOF a lot of times. In fact, if you simply just hit Control F and type in PFOF, you're going to see that this was mentioned 65 times. Now, what is PFOF? Well, it means payment for order flow, right? So basically, Robinhood relies a lot on their income or, their revenue from payment of order flow. In fact, if you just go to, this page over here, page 34 of this document, you're going to see that obviously the year hasn't ended for 2020 at the time of this recording, but, in the 3 months for March 31st, 2021, this represented over 81% of the total revenues for Robinhood. Now, this is kind of concerning that, this form of income represents such a large portion for Robinhood's revenue, right? Now, you may be wondering what payment for order flow is. So order flow payments really is just what subsidize the commission-free trading that's become the norm with U.S. retail brokers. But this is still banned in markets like Canada and the U.K. Now, this really introduced itself with Robinhood as they were the pioneers of commission-free trading, where instead of, traders or investors paying commissions to simply enter and exit a trade, everything was free because, companies or brokerages like Robinhood are making money on the back end, routing our data to market makers. Now, this could potentially be a huge risk for Robinhood simply just because in the future, this could potentially be banned in the United States as well. Now, if we're looking at it from a technical standpoint, I'm going to be very honest, just looking at the charts, it makes it difficult to see when is a good opportunity to buy into Robinhood simply because the company recently IPO'd, so there's not enough data to really see what's going on with the company unless you were day trading it. If you were day trading it, then obviously in the intraday you could see the low points and you could see the high points of the stock, and from there use your indicators to help you find out when is a good opportunity to enter. But as far as a swing trade, it makes it very difficult because we really don't have that much information on the charts. Now, if we go back to that photo I showed you guys earlier, we see that Kathy Woods of ARK Invest purchased 1.2 million shares of Robinhood, and then she also purchased about a quarter million shares of Robinhood later on in the day as well. But the problem with this information is that we really don't know what Kathy Wood's game plan is. Does she plan to hold this for a long period of time, such as 5 years, 10 years, 1 year, or is this something that she's simply swing trading for just 1 week, right? We honestly don't know. So just because a large fund manager purchased, a few shares of this, when, I say few because relative to her, this is a few shares because honestly, this is just like this percentage of what she owns in her overall portfolio. But at the end of the day, it's really difficult to know what their game plan is. So this is why I recommend to never buy simply because someone else bought, because you might also, follow their losses. For example, Kathy Woods had purchased Coinbase when it IPO'd, and if we take a look at Coinbase, right, we could see that if we gotta, obviously zoom out, Coinbase has honestly not performed very well. And if we actually zoom out to a 4-hour chart, Kathy Woods probably never made her money back with Coinbase, as we see that it's made, it's fallen down. So at the end of the day, again, you never buy based off someone else's opinion. Now, going back to the S1 filing for Robinhood, we see that they mentioned that approximately 50% of the Robinhood customers are first-time investors. Now, this is something important to take note of, and I'm going to explain why. Now, according to this article by MarketWatch, they not only agree and concur with Robinhood mentioning that most of their users are first-time investors, but they also mention that 31 is the median age for all users, which is also important to take note of, because if we go further down in the article, they also mention that the Federal Reserve Survey of Consumer Finance's data indicates how people with more assets tend to shift to professional advisors or just professional online trading brokerages, right? More professional than Robinhood, because if you have ever used Robinhood, then you would understand that Robinhood has a very simple interface, and they don't offer a lot of the features that a lot of other brokerages offer, such as TD Ameritrade or Webull, right? So something we have to take into consideration is that these individuals, as they grow, they may switch over to larger platforms or more professional platforms like Fidelity, TD Ameritrade, right? Also, you have to take in consideration that these larger online brokerages, they also offer better customer support. At the time of this video, Robinhood only allows you to email customer support. Now, as you grow, right? As you grow older, you're going to have more disposable income. And as you have more disposable income, you tend to invest more. And as you have more money into your investing platform, you're probably going to want more security, aka more customer support via calling online. So this kind of indicates that all the users that Robinhood have might end up going to a different platform later on as they grow older and as they grow and have more assets to invest with, because of course you want to have your assets in the place where you can call someone immediately if there's a problem. Now, should you buy Robinhood stock? Now, at the end of the day, that is a decision that's ultimately up to you, and it's whether or not you see value in Robinhood stock. Now, you guys might be asking, do I see value in Robinhood stock, or do I plan on buying Robinhood stock, right? And the not so simple answer is yes, but only as a day trade. I can't see myself at the time of this video investing long term or even swing trading into Robinhood stock, as I can't really expose any overnight capital in Robinhood, especially with how I see things are going, right? As a day trade is completely fine, because when it comes to day trading, you're just looking at the intraday charts. You're not really concerned with what's going on with the overall business model or the finances for the company. For a day trade, you're just strictly looking at the chart. So yeah, I would day trade Robinhood, but I would not really invest or swing trade Robinhood. So that's really my answer. But again, at the end of the day, you guys should not buy whether or not I want to buy or not buy, or what Kathy Woods is doing at ARK Invest, or any other hedge fund manager or any other trader or investor. At the end of the day, it all comes down to you guys. Now, if you're wondering what platform I recommend, if you do plan on buying Robinhood stock, I recommend the Webull platform, simply because Webull has a lot of great tools to offer you if you're trying to trade or even invest. They have a lot of great tools, and right now they also have a special promotion going on where if you deposit $5, you could get 2 free stocks valued up to $2,000. Now, when I first signed up with Webull, I got $2,000, right? Simply by just buying or setting up with Webull, and I got a free share of Google, which at the time was worth $1,200. Now, Google, I think, is worth over $2,500. So simply for signing up for Webull, I got $2,500. And again, that's what got me into Webull. But after I saw everything that the platform has to offer, I was like, hey, this is the platform I need to trade. So again, if you guys are interested with signing up for Webull to buy stocks or trade or invest, click the description below of this video and look for that link to sign up for Webull. Also, if you're interested in learning how I trade and invest in the stock market, simply click the link in the description. There's going to be a link to the Push and Profit program. Right now, there is a special limited time offer where there's 50% off on it, right? And this expires soon, so definitely take advantage of that. And with that being said, guys, hope you're having a beautiful day, and I hope to see you guys on the next video.